Good afternoon. You're all very welcome to our Tuesday call. Just to kind of update the markets. So traditionally speaking, we tend to look at more kind of the majors, the dollar, and of course the indices. But today we're going to mix things up ever so slightly and take a look at some of the volatility, some of the movement in the UK markets, and of course reciprocating that into the price action. So we do have obviously a review of the pound performance against G7 counterparts, but also as well the FTSE 100, which is the kind of the primary composition index for the UK markets as well. Now, I suppose if you're looking at kind of sentiment over the last number of weeks, you will have noticed the flash crash in the pound. You will have noticed that very, very significant recovery in the last couple of weeks or so, since about the end of September. And we're starting to see that kind of price action unfold from those current news. Now, since about yesterday afternoon, we have seen a significant slump in the gilts. And if we take a look at this very, very quick Reuters article, we can actually see that the gilts are kind of falling off. So what are gilts? Gilts are government liabilities effectively in sterling. And of course, when the gilts fall, as a result, there is going to be a knock-on direct consequential effect in the other UK-based assets. So the likes of the FTSE 100 will see a reaction. The likes of the pound will also see a reaction. So today, and of course since yesterday afternoon, with the gilts kind of taking that plunge and that little bit of a puke, we have seen the FTSE obviously run lower. So we have seen the FTSE initially this morning has been, well, it's been selling off through the course of the Asian session. We did get a little bit of a pop, a rally or dead cat bounce into the open today, the US session open, but we actually are seeing the indices now completely tumble off the back of these higher yields, both globally in the US, in Eurozone, and also in the UK as well. So the indices are very much on the back foot today. Now, structurally speaking with that as well, we also have to look at the broader markets. And with the broader markets, the pound obviously comes into check. Now, the pound has been quite mixed. When you look at the pound across the board against its G7 counterparts, it has been overall quite mixed in the broader elements. And the reason why that is because some of those other currencies have been outperforming compared to its composition. So, for example, if you look at pound Aussie or pound Kiwi, you will notice that the performance in those assets are at this moment in time quite weak this week. Whereas if you look at against the dollar or the yen or the Swiss, you'll see that the broader trend has been fairly bearish consistently. So if we look at the GBP USD, now, first of all, when I look at GBP USD, just to kind of factor in the broader perspective, now I'm just going to tidy this chart up ever so quickly just to kind of bring things back a little bit. We can see obviously higher time frame analysis, very, very clear bearish trend on the higher time frames, very, very clear sell-off. We did get that monstrous rally, that kind of recovery from 104 back into that kind of 115 level over the last couple of weeks. Now, since the tail end or since the middle of last week, we have seen that runoff in the cable prices. So that area of 115 was very, very quickly rejected, and we started to slide lower back into that kind of 110, 111 handle. Now, that's effectively where the cable has been held this week. And we talked about it obviously yesterday when we looked at the cable individually with the dollar pairs. And we can see very, very quickly that at this moment in time, yes, very, very significant selling last Tuesday, Wednesday, and Thursday. But as we ended the week and as we began this week, kind of Friday, Monday, Tuesday, starting to see a lot more consolidation within these markets now. Now, when I look at the pound as well, structurally, even on the shorter time frames, we can see that there's a very clear structural area of liquidity around here. Okay, if we look at it broad-based, you can see that there's kind of structure here. There's obviously clear rejections. Every time the price action comes into it, it seems to roll back on itself. Even today at 1 o'clock, markets were looking quite positive, tried to break through it, ultimately failed, and the markets ultimately turned back on itself. So I suppose the price action is going to be really anchored around this 110.11 level. And you want to see kind of a clear consensus, because at this moment in time, it's just zigzag up and down. Now, I suppose the only kind of caveat to that I would say is on the 1 hour order flow, we can see that we are kind of making gradual lower lows. So even though we're not kind of breaking structure, we're not kind of counter trending the move, we are kind of still, all but be it at this moment in time, still creating lower lows or marginal lower lows. So it's just about being aware of that as well in the broader mechanics of the price action. Now, today, obviously, we were looking to see would the price action ultimately take out this short-term level and try and propel through it, or if it's just going to merely unwind. And of course, what we've seen is short-term top markets are coming back again into this pre-existing range here between kind of 110.20, 110, and as high as kind of 140, 150. So very much worth keeping an eye on that on the cable over the coming days. Now, when we look at GU or into GJ, should I say, pound yen, very, very similar scenario. You will see higher time frame. It's almost an identical structure in the sense that we had this very, very massive unwinding from kind of 165, 168, where we were at the previous highs. Very, very clear liquidity move all the way down to this key liquidity area here, just underneath 149. You can see that ever so clear. Price action, very, very significant and sharp bounce into this order block area here on the daily time frame. We can also see on the daily time frame how this was rejected last Tuesday into Wednesday. Very, very clear midweek reversal last week. And as we saw, risk orientation dominated into the close of the week. So we saw the indices roll over. We saw the dollar pick up strength. We saw the yields pick up strength into what was the NFP on Friday, where the markets obviously continue to remain quite bearish in that regard. So it's just about having clear consensus. Now, when we look at the price action since last Tuesday, almost an identical move. Very, very steep kind of lows, followed by pullbacks, followed by new lows. You can kind of see that there. Kind of the first wave pullback, second wave pullback, and then we're into this consolidation. So GJ very much kind of like GU, whereas we had that consolidation, price action trying to assimilate a clear approach, which obviously at this moment in time it's not doing. It's holding underneath this kind of 6150, 6170 level. And we are remaining very, very constituted underneath that area of interest. So it's just making sure there's clear clarity, a clear setup, and obviously looking for that break of structure. But at this moment in time, markets have yet to break that kind of short-term structure. And that's ultimately how we're seeing the markets unfold. So we're seeing obviously GJ come back from that reason. We're seeing GU come back from that area. And if we went to pound Swiss, you would also see a very, very similar narrative. Okay, so you would see price action coming up to this daily level here. So if we go up to the higher time frame analysis again, very, very clear puke into this short-term area, price action unwinds again, massive liquidity rally, relief rally back into this order block area here around 112, 113. Ultimately, the daily topped out here at this area here, which is quite emphatic. And then obviously since last Tuesday, Wednesday, we've seen the markets ultimately, like pound yen, like pound dollar, ultimately unwind back into this kind of 110, 111 area. So that obviously brings in the focal point of, well, what's the markets looking like here? Well, structurally speaking, we've obviously got a period of consolidation followed by the initial impulse, phases of corrective price action to the downside, new lows, new pullbacks, followed by new lows again. So we're looking at market bias being very much kind of tilted around this kind of 110 to 111 area, just to give kind of clarity, just to give a kind of a clear mindset, and making sure that there's a clear focal point within that. And now, I suppose this morning, if you look at the price action last night, we had a 1 hour area of interest, this kind of 1 hour roadblock, order block area, which did come up, did reject, tagged a notification, and we actually have seen the markets unwind from that. So now I suppose now we want to see, is there kind of a clear, given that we were rejecting some of these areas, is there kind of a clear follow on beyond that to give us clarity beyond just the initial setup? And I suppose that's what we're looking to see now on the 1 hour. Very, very choppy, very, very back and forth. So the markets are still quite indecisive in that regard as well. And I suppose that's obviously something to be very, very conscious about in that regard. So if we move from, I suppose, those three of dollar, yen, and Swiss to, I suppose, the more specific assets like your Aussie, your Kiwi, your CAD, your kind of your weaker traditional currencies at the moment in time, given obviously the back foot of risk orientation within the markets, then you can start to assimilate a clear approach. Well, if we look at the Aussie first and foremost, again, a larger period of consolidation, obviously broke down very, very quickly. Massive sell-off. Like this is a huge wick. Like this wick alone on pound Aussie is approximating about 600 points, which is absolutely huge in its own right. Very, very strong recovery on the upside all the way back into this daily order block area here. So if we just go full screen for a moment, we can kind of see it there. We have that top and kind of the corrective phase of price action, then ultimately we get the break, and then the price action gets that V-shaped move back into this daily region. So daily impulse has been made, the flag back up, and the mitigation has been made. We've got the initial, I suppose, mitigated move. We've got the pullback to create a double mitigation structure as well within smart money concepts. So that's obviously quite clear as well. If we look at the 4 hour, you can kind of see that initial false break through the daily area, ultimately back underneath now. And we're seeing this 4 hour structure kind of play out somewhat at this moment in time. So that then brings my attention to the 1 hour structure, where we see price action ultimately, as we know, failing here, coming back underneath this daily area, and price action flagging very nicely back into this zone of interest. So we have short-term higher lows, short-term higher highs here. So from my perspective, looking for that, I suppose, break of structure, looking for that clear clarity move, breaking, I suppose, the short-term liquidity order flow, giving us that initial wave of confirmation. And I suppose from that perspective, you can either look and wait for a double mitigation again, or triple mitigation in this case, for the wave of selling, or that being the catalyst here, waiting for a kind of structured break. Now, at this moment in time, daily area at 176.36 is holding very, very nicely as well. So you can see how the dynamic is at play. Of course, now if the indices into Thursday's CPI continues to remain quite weak, and the risk assets continue in terms of weaker indices, weaker stock markets, weaker Aussie, weaker Kiwi, etc., weaker oil, CAD, then that could be the catalyst for, I suppose, the pound pairs, I suppose, getting a little bit of strength against those weaker currencies in the back end of that. So I suppose that would be kind of the only invalidation that I can think of this week that would maybe contribute to pound outperformance against the Aussie dollar, or pound outperformance against the Kiwi in the back of that as well. All right. So a very, very similar viewpoint in the Kiwi. And I suppose the Kiwi is a little bit more cleaner in my respect, because we have had a massive period of consolidation, and you can see it here very, very quickly. If I just remove the arrow for a second, you can see that very, very clear impulse of move out, trapping, taking liquidity on one side, then obviously breaking through the highs. So effectively what we've done here is we've taken liquidity on the sell side, we've taken liquidity on the buy side. Now, immediately within smart money, when you have consolidation, we take lows, we then look for taking of highs, then we look for the flag back to liquidate the remaining order flow of the initial impulse, which will be kind of somewhere in this region. And then you'd look for the next phase of trending corrective price action to play out. But now when we look at it, and now this is obviously a higher time frame perspective, so this ideal structure would take place over a much broader period of time, because we're incorporating a larger amount of data into that consideration. Now, when we look at the 4 hour chart very, very quickly, we can see here that, yeah, we've had that impulse, we've had the return, we're holding back above this 188 level, and then we completely take out the highs. So we've taken out the highs into this liquidity area up here. We've made that kind of initial impulse out to the upside, and we've broken this internal structure. So you can see here now, if I just remove that for a second, you can see how we've got short-term highs, short-term higher highs, higher lows. But you'll see here that we have, from that perspective, we've now got a break of structure. Why? Because we're creating bullish order flow. We've made new temporary lows in the pullback. We're flagging back up into this region. So from my perspective now, it's a case of it's either do or die for pound Kiwi in terms of, well, if we're going to get this pullback down here, like we talked about with the higher time frames, it should happen realistically somewhere in this ballpark area if it's going to play out. If it's not going to play out, that means that pound is going to dominate over Kiwi. And the likelihood is that this is a short-term pause in what is a more elongated continuation to the upside. So from that perspective, we just kind of need to be conscious of that as well, in the backdrop of everything that's happening in the pound, of course, with all of these other central bank meetings and so on. So if we look at the 1 hour as well last night, we can actually kind of break this down. So I know this is obviously a 4 hour area. You can kind of see it here, 4 hour rejection, 1 hour rejections on a 4 hour order block. You can see it here last night, 1 hour rejection as well. Price actions unwound back into this region. So we are creating a short-term move higher today off the back of weaker indices on the open. So as I'm doing this now, I'm looking at the price action on the open. We have seen a decent bit of selling in the first 45 minutes or so of this trading session, which means that the Kiwi dollar, the Aussie dollar, those risk-orientated assets or risk-orientated currencies are actually finding a little bit of weakness. And that's obviously why the pound is obviously getting a little bit of a bid, pound Aussie, pound Kiwi, etc. So obviously when we look at that, we just need to be kind of conscious of that. So worth keeping an eye on this over the next few days, given the backdrop of what we looked at. Because if the higher time frame plays out, which no guarantee it will, but if it were to, you could very easily see this correcting back into this region here between kind of 190, 192. From my perspective, the invalidation here is really that if it starts taking out those 4 hour, this 4 hour order block here really as high as 2, then obviously that's going to invalidate shorts for the moment, potentially, because the likelihood is that that's going to allow for a breakout to the upside. So with that as well, We're also looking at the Canadian dollar. So the Canadian dollar has had a massive run up in previous months. And again, that's contributed to the stronger oil prices that we've seen over the last 18 months or so. So with the stronger oil prices means stronger Canadian dollar because of the underweighted correlation between the Canadian dollar and its highest sectoral output in its economy, which of course is the oil market. So obviously big exporters of oil. So directly then we've seen the Canadian dollar completely like romp out of control here against the pound, gone from that area of kind of 170, 175 all the way back to kind of 140, which is a huge move. It's a 20, 25, 30% move in about 18 months, which again, in real terms, is a huge, monstrous move. Now, when I look at the price action here more recently, now again, I'm just going to remove these fibs for a second, we can see the order flow playing out very, very cleanly. So we've got daily order flow, pullbacks, lower highs, lower lows, lower highs, lower lows, lower highs. So the trend is fairly clear. It's fairly emphatic. The broader trend is what it is, and it's obviously moving to the downside. We can see that impulsive move to the downside, obviously, with the recent pound crash and that underweighted kind of recovery to the upside back into this area of interest up here. Now, from my perspective, when I look at the price action, I see this 155 as being a very, very interesting area because we've obviously got an initial move from here, right, from 151, but we have also a secondary move, an earlier impulse from this kind of 155 all the way into this consolidation. So you kind of have an impulsive move within an impulsive move between a consolidation. And we can see that the markets, when they recovered, they're not alone kind of took out the liquidity here, but they've also come up to mitigate this daily order block level up here at 155. Now, that's exactly what's happened. Last Tuesday, we came up, we rejected it to the T. Wednesday, we almost got a bearish engulfing, but not quite. And then obviously Thursday, Friday, we continued selling off into the end of the week. Now, of course, as we look at the shorter time frames, and we look at the 1 hour more specifically, if we look at the 1 hour chart, it becomes really, really clear, because what we're actually seeing up here is when we isolate the data and isolate the price action between, let's say, last Tuesday and today, we can see that there's very, very clear bearish correction move. So we've got a set of lows here, like so. We've got another set of lows here. We've got lower highs. We've got lower highs. We've got new lows taking into this region here before we see the corrective action. So this kind of move up here, like so, is in effect a corrective short term. It's a kind of a day trading short term perspective against this sell off that we've seen since last Tuesday. So that really then brings in this area of interest that I've been looking at around 153.45, 153.50 of this 1 hour structure. Because when we isolate the price action, I'm just going to remove this blue line, we can see that there is obviously an area of consolidation, a very, very sharp impulsive move into consolidation. Initial breakout to the downside proved to be a stop hunt, proved to be a manipulated move. Why? Because the markets are in recovery. Now, when we look at the 1 hour charts here on pound CAD, we can see short-term highs, short-term lows, short-term highs again, short-term lows. So you can see that the price action is now grinding back into this region. So I suppose from a trend, so all of a sudden now you're looking at, right, this very, very quick 2 week recovery from 140 back into 155, topping out at 155, creating these legs of short-term intermittent bearish price action. So I suppose at this moment in time, unless this structure is broken this week, you're kind of looking at saying, well, this looks like a logical scenario for price action to look at. And if we go one further into that, you then look at, I suppose, the short-term lows, the short-term highs being the, I suppose, the tool for calculating retracements and so on. So if I look at the Fibonacci's, I can see here short-term highs, short-term lows, including the manipulated leg. And we can see how the price action is flagging beautifully back into this 61.8 discount zone. Now, we do have 61.8, which we're currently rejecting. Would I be surprised to see the markets go slightly higher through that? I wouldn't be surprised. So that's why I'm kind of looking at this discount zone 71.78, but I'm also looking at this 153.50 because there's clear price action, there's clear structure, there's a clear mindset behind this region, and it's all about kind of creating as many confidence as you can within your trading plans. You've got your risk, you've got your psychology. If you take fundamentals into consideration, you're taking that into consideration, and then you're looking at the price action. And if you're taking a position, whether it's long or short or medium term or longer term, what is your confirmation structures in order for you to be taking the position that you're looking to take? It's all about having a clear rationality. So at least that way there's justification for doing what you want to do. And then, of course, then in the background, as we move to euro pound, Lastly, we're seeing obviously a very, very clear move as well. So euro pound is quite different in the sense that when you look at the weekly charts, even just to get a lot of perspective on things, because the weekly charts is really clean at the moment, we had that obviously very, very key important level here between 92 and 93. So that's obviously the first illustration you can see in the weekly. Very clear corrective pattern in the last year or so off the weaker euro. Which allowed euro pound to kind of come into this 82, 83 level. Now, structurally speaking, if we go down to the daily charts and kind of compress the data for a moment, we can see how the price action here is initially kind of holding this region here. So 87, 88 is kind of your barometer rejections. We then come down into this kind of bearish trend. You can kind of see your order flow, lower highs, equal highs, lower highs, into this consolidation where we seem to find this kind of bottom here around 82.50. Now, what we've seen ultimately from there is 82.50. We've taken out the short-term consolidation here at the top of this yellow area. We flag back down to the bottom of this region, taking majority of the liquidity, and then ultimately we've gone on two impulses. Okay, so the first impulse starts after this yellow short-term region where we've gone up into this kind of 87, 88 level, which, as we know it, is a short-term intermittent area of interest. And then what's happened from there is, well, we've 3 waves of corrective structure, but then we've kind of reset because the price action has broken above this level here at 87. We've come back down to retest, and then we get that massive impulse there 2 weeks ago on the 23rd, 26th of September, when the markets just went completely parabolic. Now, when we break the price action down from there, we're obviously seeing that clear rejection in 92s. Markets has come back into this kind of 87, 88 level, and now we're finding cyclical consolidation. So there's been a lot on both sides, particularly between the battle between buyers and sellers. So the markets here now, when you look at the 4-hour, when you look at the 1-hour charts, very much in consolidation, because you've got that impulse back into this liquidity level, even breaking through temporarily, flagging back up, and you can even see these 4-hour this 4-hour order block here in 88 to 88.25-ish being rejected. So you've got multiple 4-hour rejections, 1, 2, 3, and 4 today. So markets obviously holding underneath that. And of course, when you look at it as well on the 1-hour chart, you can see how the price action today has been drifting literally sideways. So we've been very condensed. Accumulating price action is definitely accumulating more volume as we speak on this at the minute. So it's all about kind of identifying these structures as well. So I suppose, again, we're looking for clarity, we're looking for confirmation, and we're looking to obviously visualize the price action, break everything down, make it as clean as possible. And then in doing so, then you can have a little bit more structure around your trading plan. And again, that applies to everyone, whether it's short term, whether you're trading 5s and 15s and 30s, whether you're trading 1-minute charts, whether you're trading 1-hour charts, or you're trading the higher time frame charts as well. All right. So that's pretty much it for today, everyone. We will be back later in the week. We will be doing obviously a deeper dive for the CPI and looking at, of course, the all-important CPI data print in the US on Thursday at 1:30 as well. All right, guys and ladies, have a great week. Trade safe, and we'll see y'all later.